You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the podcast. Thank you for being here. Illustrations. Is that what's the most important thing? Recently, I've connected with a few people who I believe were very focused on the illustration, probably more than anything else. They had already spoken to another advisor. I don't know if they were a practitioner, but they'd spoken to someone else. And they wanted to see the difference with what I would create versus what they had already seen. And sometimes I'm asked if I can run illustrations with different companies so that they can see which is best. So I think it's really easy to lose sight of what's important when beginning this process. And so I thought I would talk about that today. There's a reason why I like working with the primary company that I choose to work with, as I'm sure other practitioners feel the same way with the companies that they're working with. But for me, my primary company, some of the reasons that I like working with them is that, first of all, they have one of the strongest guarantees in the industry. And I find that to be very important because this is where I'm housing my savings dollars, and I want those dollars to be safe. And so I want them to have a strong guarantee, something I can count on for my future years. They're also pro IBC. They are very supportive. They even send out one of their top actuaries or senior actuary to our IBC think tank events every year, which is super great because you get to talk to the actual person, one of the people that are building these contracts, which is really great because there's always something to learn. And I enjoy being able to learn from that person. And there's a handful of representatives from the different insurance companies that are supportive of IBC that come to these think tanks that we all appreciate that are really great. The company is conservative with how they invest their funds on hand, which I appreciate because I don't want my insurance company taking risk. If I want risk, I'll go somewhere else for it, not my life insurance company. One cool thing that they did was have their actuaries connect with top agencies. This was a while back to ask us, what would we like to see in a whole life policy designed for the purpose and use of the infinite banking concept? And so they just built something really great, really cool that has great features. And so it's hard for me to go to a different company when I like so many features from this company that built the policy, the contracts on purpose for the infinite banking concept. So now any practitioner you speak to, I'm sure will have their reasons, like I said, for why they choose to work with the company they work with or the however many companies they work with, the reasons why they like to work with those companies. I do work with about 10 different companies for different reasons, different purposes. And then I have my primary for when I'm building whole life for the purpose of IBC. But what's most important, more than even which mutual company you're going with, is what you do with the policy, your actions, that you're being an honest banker. Of course, it is also important that you're working with a mutual life insurance company that's dividend paying or participating. You want to make sure you are working with a mutual company, that's for sure. But I would say it's almost always possible for someone to make their illustration look better than someone else's, depending on the goal. If I'm just trying to win the client and I see another practitioner or advisor's illustration, I am almost 100% certain I could tweak this or that. This is why mine is better than that one, or to make mine look better. However, is it better? Just because the cash value might illustrate slightly higher doesn't mean it's a better structure. All your attention shouldn't be on who has the highest cash value. The structure, being able to continue funding if you want to, and keeping the policy from becoming taxable, and how you bank with your policy are far more important. It's really not about the illustration of one banking policy or one whole life policy designed for infinite banking. It's about banking with that policy, creating a system of policies, a banking system. Your focus could just be on the cash value and getting it to reflect access to as many of your dollars as possible as soon as possible. But that might come with a higher risk of the contract becoming a modified endowment contract, taxable. Because to get access to more of your cash sooner, you have to shrink the base premium farther down. And as I mentioned in a previous podcast, a higher base actually gives more protection from becoming a mech. In addition, a higher base will have more cash value in later years, simply because you are putting more money in. And once you drop off the paid up additions rider, which will eventually have to happen, the remaining fuel becomes the base premium that's remaining. So, with a lower base, you will also most likely have to drop off your paid up additions sooner, or otherwise, you could cause the contract to become taxable. Sometimes I'm asked, how long do I have to fund the premium at this level? Or when can I drop it? Or how long do I keep the paid up additions on the policy? So you might think that you aren't going to want to fund a high premium for very long, or that you're going to want to stop the premium at a certain point in time in the future. However, once you begin this process, you may find that you will continue to need a place to store your dollars, to store your cash, a place that's safe and that is doing way more for you than a savings account. The infinite banking concept is about building a pool of cash from which you will be able to finance the needs and wants in your life by relocating dollars to be stored more safely in a place where they will be doing more for you. Therefore, as long as you have cash flow, you may continue to need a place to store your savings safely. Keeping your focus on obtaining the highest cash value possible as soon as possible, it may mean that you will need to have term rider inside the policy, and it may mean that your policy will require quite a lot of term to be able to do that, which again could cause your policy to become more risky for a potential future mech than having a higher base premium. A large term rider can also restrict you from building your banking system in the future. You might max out your insurability doing this, and then when the time comes for growth, you may be restricted in acquiring or starting a second whole life policy. Another thing is the lower the base, the lower the death benefit. The paid up additions will be buying more death benefit, so it will be growing. But if you have a large term rider inside of the contract that will end up coming off in the future, then that will lower your death benefit back down. Now, once that happens, usually again it starts to grow, but it would be a lot higher and then shrink all of a sudden when that term rider comes down in your older years when you are closer to passing away. Maybe one company's dividends project higher than another company's, but that could mean that they are taking on more risk as a company to provide that higher dividend. And for me, I prefer a stronger guarantee, as I mentioned earlier, because my whole life policy is something that I want to remain stable, that I don't want to take risk in. If I want risk, I'll go to the market for it. I don't prefer that my insurance company take on more risk to try and provide a higher dividend. And remember, dividends are not guaranteed. So whatever you're looking at on the illustration is basically guaranteed not to happen. Now, I have contracts with people who started over a decade ago, and for those that stuck with their original funding plan because it's flexible and people often change what they're funding or change the paid up addition, drop it down and pay less for a year or skip a year and then bring it back up, or maybe they stop sooner than they had planned. But for those who stuck with the original funding plan, the cash value is currently very close to what it illustrated to be at this future time. However, dividends are not guaranteed and likely to be different than what's illustrated over the course of many years. Dividends could end up being higher or they could end up being lower. Or if the world gets super crazy, I know you might be thinking, how could it get any crazier? They could miss a dividend altogether. Now, the primary company that I work with actually increased their dividend the last few years. So people who started their policies years ago with a lower projection are now enjoying a higher cash value than predicted. However, with all that's going on in the world all the time, the company could certainly miss a dividend or it could be lower than originally projected. Basically, what's most important is that you connect with an IBC practitioner that you like, that you trust and have confidence that they know what they're doing, that they're going to have your best interest at heart and build your whole life contract in a way that fits your needs, your goals, your purpose, and your budget now and into the future. And that they're working with a dividend paying whole life insurance contract with a mutual company. That's what's most important. One other thing that someone asked me recently is what's the difference really between working with you and another IBC practitioner? And I would say that we all should be using dividend paying whole life and hopefully structuring your policy well when it comes to IBC. We should all be working with a mutual whole life insurance company. One difference between me and someone else may be that I'm a fully licensed financial professional and can help you in more than one way. In addition to this, and being an IBC practitioner, I also have a designation for being a life and annuity certified professional, as well as I just completed 8 courses over the last 3 years to obtain my chartered financial consultant designation because the learning never stops in this industry. So I can look at the whole picture when talking to you and give advice, direction, and options to better protect other risks or assets in your life. I can help you with market accounts. I can help you protect your wealth that you've built up in those types of accounts. I can help you create an income stream that you cannot outlive. I can help you with disability coverage to protect against becoming too sick or hurt to work, long-term care for those future years when you may need to afford help in your home or assisted living. I am able to look at the whole picture and help make sure that your overall plan works together to help you reach your goals. So that may be one way that I'm different than some of the other practitioners. But otherwise, when it comes to IBC, I believe that we all should be doing a good job for you. Anyhow, if IBC is something you're ready to begin and you would like to work with me as your advisor, feel free to reach out to me. As usual, you can reach me at valerie@alphaomegawealth.com. I hope this episode was helpful to you in some way. I appreciate you listening as always, and I hope you have a great week.